Hey everybody, Gary with Basecamp Trading. Take a look at the ES futures today. If you were in the room yesterday as we were leaving, we were talking about how we had triggered a run-on stops. This bar actually pushed up to new all-time highs by just a couple points, but didn't continue on. We didn't break and continue to run. We ended up pulling back, leaving this reversal doji. And again, it's a reversal doji if the next bar triggers it to the downside, continuation doji if it triggers it to the upside. Well, you can see today's bar triggered this to the downside, triggering a reversal doji, leaving a really bearish daily bar. And as you know, the ES took a pretty big drop today. Today was FOMC day, and no surprises, of course. We weren't really anticipating any. Um, Chairman Powell didn't really say much of anything. Um, right after the rate decision, during his conversation, you had some kind of choppy price action, kind of moved up and down, which is typical. But overall, we maintained the bearish price action, and then on through the rest of the day, made a pretty strong push down. You can see this ended up closing as a pretty bearish bar. We even hit significantly undervalued on our value charts. So a very bearish daily chart based on a run-on stops and a reversal doji triggering to the downside. Then we had a bearish 240-minute chart. You can see yesterday we came up here, made new all-time highs on bearish divergence. You can see we had a higher high here than back here, but a much lower high on momentum than back here. So higher high on momentum back here, higher high in price, but lower high in momentum here. So we had bearish divergence as we were triggering a bearish daily chart. We had a bearish 240-minute chart, and then we ended up with a bearish 30-minute chart. This was our 30-minute chart. There we go. Sorry about that. You can see that we were in consolidation. Then that daily reversal doji actually triggered during the London session last night. That 240-minute chart actually triggered on that bar, which was actually during the London session, and then it carried on into the US session. And you see a really bearish day, closed under the 50, even closed under the 200. And we know the 50 and the 200 are significant support and resistance. Now we had some reaction here. We poked under it, back above it, under it, back above it, but ultimately ended up closing underneath it. So we had a bearish 240-minute chart, and then we had this bearish 30-minute chart. Again, we kind of compressed sideways during the London session, triggered that daily reversal doji, and you can see 30-minute chart just continued to work its way lower throughout the rest of the day. So when we have confluence like that, we have a bearish daily chart, a bearish 240-minute chart, and a bearish 30-minute chart. Those are the times where it's reasonable to expect these larger moves. And we had a solid move to the downside. I mean, we came down over 130 points off the highs from yesterday. And that's a significant move to the downside. And so when we're in bearish confluence like that, we're just concentrate on bearish setups. And you can see here's our Unorenko chart. And you can see really starting last night, which was back here in the London session. Here we go. This is where we were in that consolidation, right? And here's where we triggered that daily reversal doji to the downside in the London session. And then look at our short setups. Nice wick off the 18 to the downside, another wick off the 18 to the downside, wick off the 34 to the downside, wick off the 18 to the downside. We were extended at this point, go into consolidation. Nothing goes straight up or straight down. Consolidated, set up another move out of the cloud, another wick off the 18, little consolidation, wick off the 18. We're in the US session now. So again, we're just concentrating on short setups. There's Trend Pro 2.0 signal to the downside. You had one here. That wasn't a signal you probably would want to take. If you did, it would have you would have taken a stop out on that one. Your momentum really wasn't confirming this setup, but if you took it, you might have. We were in a downtrend, bearish 30-minute chart, bearish 240-minute chart. If you did, took a stop out, that's okay. Not every trade's a winner. Another 2.0 entry signal for another nice winner to the downside. And this is our 4-tick Uniranko chart. So like this move, for example, would have triggered in somewhere around 37.79. You had a low all the way down at 37.62. That's 17 full ES points, or potentially $750 per contract. So these moves are decent moves that you could have definitely collected some decent money on. They gave you opportunities to collect some decent trades on. I mean, even this move right here would have triggered you in around 37.86. The low was down at, let's call it 37.78. But again, another $300-400 potential on this move right here. Now you would have taken a stop out here if you took that one. But that's okay. Another nice push down. And then we got extended. Started pushing back the other way. You can see this was the after the U.S. session opened, because the U.S. session actually opened back here at 8:30 Central Time. Pushed down, got extended, pulled back up. Then we got another nice setup to the downside. Went into lunchtime, consolidated. FOMC was right in here. Got a nice push to the downside. Of course, because there was no rate change, so that just continued our bearish trend to the downside. Right in here's where Chairman Powell was speaking. And you can see we just kind of went into consolidation and then continued our move to the downside. Got a little pullback into the close. The option chain was suggesting that we were going to get a little pullback. At this point, there were just way too many puts in the money at this point. So market makers needed to make a pullback here to try and hang on to some of that premium. And then before the end of the day, another strong push to the downside here. So you can see a very bearish day based on bearish higher time frame Confluence. Again, we had a bearish daily chart, a bearish 240-minute chart, and a bearish 30-minute chart. When we're in bearish Confluence like that, we're primarily looking for bearish setups, and we know that those are the times where it's reasonable to expect some larger moves.